What's up, skaters? Bit of a tough update to do, bit of a hard one, bit of a realization. But last week I went down like 15,000 on OCGN. Then this week I was like seconds away from blowing up on SCKT. Discipline, it's gone to absolute hell. I was cutting losses at 1%. That's what I've always advised to do. But somewhere along the line, fear and greed, never being happy with how much you make, always not being happy with making $1,000 in a day. It's like, if I can just make 500, and then if I can just make 1,000, then if I can just make 2,000, and then I've got to the point where it's all about profits and not about process, and I've just totally fucked up, and I nearly blew up my account. And it all started on the 9th with OCGN. I was down like 15 grand, swung it from the 8th to the 9th. And this multi-day gap I set up, I don't mind it because I've made a lot of money from an overextended gap, but it's just the volume, the 800 million volume is too high for this setup to work. And I don't even mind letting it rip and shorten the bounce and looking for the bounce to fail or shorten the push. But the point is, it's when it breaks high of day, the initial high of day that it's formed, once that's broke, it's just way too bullish and you have to cut the high of day, and I didn't do it. And then I really don't mind being in at 1050 and being out at 11. Like, I really don't mind on this kind of setup. I think you've got downside if you get the 1050s, if you get the 11s, you've got downsides to the 8s, so it's like 4 to 1, 5 to 1 risk reward on a setup where these multi-day gappers, this had more volume, but these multi-day gappers, they fail more than half the time. So if I'm getting 3 to 4 risk reward on a setup that fails more than half the time, it's an excellent setup, and it is an excellent setup. But I just didn't cut the high of the day. I got stuck. I added too much size here, and then I let it rip on it. And somewhere along the line, when it holds mid-range, consolidation is bullish, and it just ripped. And then with SCKT, this is something I shouldn't have been in. I've made money on this day, made money on this day, made money every day that it's gapped, just thinking it's absolute trash, and it is absolute trash. But when there's a trend of 52 weeks high stocks go like really like ripping 30, 40, 50%, 52 week high gappers are something that I constantly say to people: don't get in, like don't get in, don't short them. There's a reason why you don't short them. Again, like why I'm in this, I don't know. And even the push into higher day, I don't mind the short. I mean, it's not a good short, but I kind of understand that if it fails all the time on volume, it could fail today. And shorting into the 1130s, risking the pre-market highs, when it breaks higher day, you've lost 40, 50 cents. It's fine. I mean, even this, where you catch the trend break, shortening the 1330, saying it might be done, risking the high of the day in the 14s. Like, as long as you've got a clearly well-defined price and stock on a company that more often than not fails. I mean, in this market, it's crazy, but you've got to understand, like, I've made, I mean, nearly lost a lot, but from the strategy, I've turned 600,000 into, still, I mean, I've been lucky recently, but still $600 into 77,500. That's not updated. It's 3,500. Turn $600 into 78,000, shorting these gappers. But the difference is you've got to respect your risk. You've got to get out at the right times. There is money to be made risking the high of day. And again, if you shorten the 13s and you take half off on the way down and you stop out for the rest in the 14s, you've still made some money off that short. But it's just happening over and over again. Like OCGN was like a multi-day gap where it's a bit different, but SCKT 2 days ago and then PETS yesterday, people are looking for 52 week high gappers, trashy 52 week high gappers. And even with this, when we look at it, it's like it just faded all day and then ripped back on you. And usually I'd play with 1% risk, but say I'm shorting thinking this is a head and shoulders or something like that, and we've got kind of the oh, it's thinking that this is like maybe that's a shoulder, these two are shoulders, and that's a head. It's not perfect, but it's like a triple top, almost head and shoulders. If I'm shorting into the 820s with 1% risk, taking $10,000 worth, if I don't cut immediately, or I get stubborn for a few minutes, and this goes from 8 to 14 in this market. Like, it's not a market where I can play 1% risk anymore, unless I've got extreme discipline and I'm extremely fast. Because 8 to 14, $10,000 is an $8,000 loss. If that rips 80% on you, 70%, you're down $7,000 in 10 minutes. And with just the aim to make 800 in a trade, 700 in a trade, you could lose 7,000 straight away. And I just have to change the strategy again. I have to, if I'm playing something like this, the only way I can see how to play it is, you've got your high of day. I mean, again, it's like, I can't play, I can't be shorting, like being like, all right, if I just take 6%, 7%, I've got to play for higher margins and risk less. It's like, get out of that kind of scalping mentality. So it's more of a trade of like, if you're shorting in the 8s, you're risking the 9s. If you're risking the 9s, that's 8%. So if you're risking 8%, how many shares can you take? Well, if it's $1,000 position, if it's a $2,000 position and you risk 8%, you're risking like, I don't know, like 200, $250. That's fine. So you'll risk $250, but the idea is that you're not playing for, you're risking 3% because 4%, you can't risk 1% anymore. It's too volatile. So if you're risking 3-4%, but you're in the 9s, you're playing for the gap down today, you're playing for the 3s. So you might risk 4%, but you're playing for 12%. You will still make just as much because I'm not playing for a 5% big size. I mean, this is where I'm going wrong. The stocks at the moment are just way too volatile. I can't get out quick enough, and 1% risk doesn't work for me. And once you mess up one or two and your discipline goes, then you get stubborn and you don't cut. So with these crazy moves happening, I've just got to play wider risk, play smaller size, but go play for more of the move. I mean, with SCKT, I mean, you've got to think I was down 22 grand. I nearly lost the whole lot. I nearly blew up the 30k, 28k account. But what's to say you stop out high of day and whatever, like, you might try it again, but if you don't compromise your position, they all come back down. You've got the head and shoulders. You've got this perfect head and shoulders up here. If you don't compromise your position, this will come down, and you shorten the 32s, risking the 35s, you've got $3 risk. $3 risk on a $30 stock is, you're risking 10%. So if you're thinking, right, risking 10%, max loss is $250 on this. So what's the position size? Well, the most I can take, right, if I'm going to risk 10%, the most I can take is $2,500 position to risk 10%, $250. But the downside from 33, if you do swing this, I mean, I did swing this ultimately, but I only made back what I'd lost. But if you do swing this and you're covering in the 12s, you've made like 60%. So I'd be making $1,200 on this trade, risking $250. So, and like, I know the entries, I know when things are topping out, I understand, I know GABA's fucking better than 99% of people. I know I've been shorting GABAs for 4 years. I've been making a fucking crazy return on investment, 10,000% return on investment. I know GABA's pretty much better than anyone. It's just a case of being more disciplined, and it all comes from adding to losers as well. I mean, if you look at all of my biggest losses, I mean, I haven't added, I mean, the two biggest unrealized losses, like, I'm not counting unrealized losses, but the two biggest unrealized losses was OCGN. What did I do? Add. And what did I do on SCKT? Add. And then when you look at my biggest losses, well, what did I do wrong? You shorted and didn't respect risk and didn't cover, then added on the way up, trying to get your position better. Lost 5k, probably should have lost more. ADOM is a trade from like 2018, so I can't really remember. That one's 2018. KNDI, what did I do? I didn't respect risk. When I broke risk, I added. Lost 4k. AUVI, what did I do? I didn't respect risk. I added. AETI, I've got, continuation mistake, adding losing head. Didn't respect the volume, didn't respect the breakout, didn't respect the price action. LUB, I can tell you I added. I didn't have the save trade, but I did. CLWT, I mean, I've just copy pasted, added losing head, because all I've done is added. PPSI, added all the way up, didn't respect risk. Same with that one, didn't cut the high of day. There's many better ways of playing this. You've got the double top and the fade all the way back down to the 420s from the 6s if you just be patient and hold on. ZOM, you can see I added. NIO, added. Everything, every big loss is added. But when you add these up, so for example, I nearly lost 30,000 yesterday, so 35, if you add them up, 40, 45, 50, 55, 58, 61, 65. There's 70,000 plus in losses. So imagine each of these were controlled losses. Now I've lost probably at least $60,000 more than I should have by adding the stocks. I've lost $60,000. Now you can't say, well, what about the ones that came back and you made money? What about the times when you turned those crazy bad losers in? But I would say that, I mean, on all of the stocks that say you add, I'll go down 1,000, 2,000, 3,000, 4,000. And then you add, it comes back down, you make back, and you're like, all right, turn that bad trade into a $500 win. Look, I read the market well. Look, I've got all this data that backs it up. But every now and then the data doesn't work. Like, no data is foolproof. And wouldn't it be better to take the $500 loss, the $250 loss, let the thing rate up? So you where you'd be 3,000, 4,000, 5,000 red. And why not make 2,000, 3,000, 4,000 on the way back down? Or why do I have to lose on the way up and then lose on the way back down and then make it back on the way back down, then win a bit more, risking exponentially more capital? It just makes absolutely no sense. It makes no sense at all to go on these risky raids where I might not be able to trade another day if I blow up, when I could just cut the loss and have an opportunity higher up to make even more money without compensating by making the money back that I'd had to lose on the way up. So, I mean, look, all I can do is just know that I'd be pretty much $50,000 better off if I just cut the risk. And the question is, well, how are you going to do that? Well, all I can do is size way down, practice a new strategy, and trade it. And it's also weird that I just thought, I was sure that you had to work super hard and be stressed out and you had to read the patterns super well and be 1 second ahead of everyone else to have this defined edge in trading. But I just don't think it's like that anymore. I used to think, I've got to spot the price action and read the candles because I've got 5 years of screen time now. I don't think it's like that anymore. I'm starting to think that good risk reward and good processes are what makes millions in the stock market. I don't think it's being this kind of fucking on Adderall geek, on nerd who's just staring at every tick and every second. It's not. It's just having good risk management and repeating profitable patterns over and over and over. And it's easier, it's less stressful, and I'll not blow up. I even been blown up. So the game is now to have a 250 max loss, and I'm trading once in, once out. I'm not, for now, I'm not adding. I'll add to winners, but I'm not adding to losers ever. I used to be like, oh well, you can add to losers if it's in your plan. Well, you can do that, but when you start losing discipline, you start adding to losers outside your plan. So I just want to eradicate adding completely. I've got all I want to do. I know what patterns are profitable. I know what patterns will give me what risk reward, and I know what I can trust and what I can't, and I know when to get in and when to get out. And if I do get out, I know when I can get back in again. So I'm going to be trading with $250 risk, and if I can not break the $250 risk till the end of the month, I'll trade with $500 risk. And that's the other thing. If you're trading with 1% risk and you size up, at some point that size is going to get out of control. And you're taking a $100,000 position, $100,000 position, something goes wrong, you go wrong 50%, you've lost 50k. When you're taking a $100,000 position, it makes 7%. But if you're trading with one trading, you've got your max loss in mind. It's more just a process that you're repeating. I don't know, it just makes sense in my head, and we're going to go with it, we're going to run with it. And basically from here on out, I'm trading with a $250 max loss. So if I can stick to it till the end of the month, I'll trade with a $500 max loss. For each trade, if I can stick with that, I'll go 750, then 1,000, then 2,000, then 5,000, then 10,000, then whatever, 20,000, 50,000. Like I'll keep on upping the risk as long as I keep on cutting the losses and not going over them, because I know I can trade profitably. I know the process is perfect, but I just need to prove that I can be disciplined with a new kind of way of trading.